GM, good morning my fellow Degens, those who I like to call the Chico Army. Even if it's not morning where you are, any time is time for a good GM. Well, your morning is about to get a whole lot better because Chico is about to drop crypto portfolio content like it's hot. Let's put the two together because it's time for Chico Crypto. So just admit it, most people out there don't know what they are doing when it comes to building a good crypto portfolio. They suck and they base their portfolio picks on looking for that big old moonshot, which equals filling up their portfolio with shat coins whose value doesn't go to the moon but to the depths of hell.
Hi everyone, I'm Hide the Pain Harold. I've been hiding the pain for 34 years now.
Don't be a shatcoin chaser, but you can't be too conservative either. By playing it too safe, you miss major opportunities, which means missing out on some sweet gains. Creating a solid portfolio is all about gauging risk tolerance in the markets. When the markets are reaching peak hype and euphoria, you want to start to scale back your risk tolerance and set yourself up in conservative assets like stablecoins. When the market is reaching peak fear, it's time to start getting more aggressive and turning those stablecoins into altcoins you see winning when the bulls return. So think of your portfolio like setting up an army for the battlefield. When the markets are at peak fear, you want to increase your risk tolerance, which means putting forward more infantrymen, aka coins with a higher risk profile, and less defense, aka coins with a low risk profile, better known as stables. You want to go on the offensive. When the markets are at peak greed, you want to go on the defensive, which means pulling back your infantrymen and converting them into defense, aka stables who can protect your portfolio from a coming bear onslaught. So if you think right now we are near the bottom of where Bitcoin will fall, it's time to go on the offensive. It's time to start taking the stablecoins you may have been in and reallocating them into riskier altcoins, which you should DYOR to make sure they are solid plays, which will surge when the markets return. Although if you are bearish and think the markets are going to fall even further, it would mean you would want to allocate any risky altcoins into stables and keep the allocation of stable defense you already have. This is a personal choice of how you see the markets. So what is Chico Crypto's view? Well, remember, this is not financial advice and you should not base your portfolios on what I just say. But I personally think we are close to the bottom. We may fall a bit more this week due to the FOMC meeting next week, but I don't think by that much. So, before building or reconstructing a crypto portfolio, you have to gauge the risk in the markets, but you also have to gauge your own risk tolerance. You need to ask yourself some serious questions and do some soul searching to figure this out. Like the number one question, how long have you been in cryptocurrency? Do you consider yourself an expert, beginner, or an intermediate? Then a major question. Question number two to ask yourself, how would you feel if your portfolio crashed and got reduced by 90 to 99%? Question number three to ask yourself, do you have any other assets outside of crypto to help weather a storm? Stocks, retirement, real estate, precious metals, cash money? Question number four, how much money do you make outside of cryptocurrency? Do you have an alternative income source? Question number five, how has your performance been across your assets over the past year? How have you been feeling about your trading? Those are just example questions, but by asking yourself them and answering them honestly, you should be able to assess and get your own risk tolerance. Now, I have a high risk tolerance. I've been involved with Bitcoin since 2013, but only really got heavy into trading in 2017. I consider myself an intermediate close to expert. I have been involved with two major crashes where my portfolio got reduced by 90 to 99%. Although I've stuck around and now my portfolio is very healthy, where even if another 90 to 99% crash happened, I would be just fine. That is why I'm majority all in on crypto. I could weather a storm and be fine without alternative assets. And I do have alternative income through YouTube, which isn't tied to the crypto markets directly. And I've been feeling good about my trading over the past year, even though the performance hasn't been the best lately. So ask yourself those questions and figure it out, because the next step is to start constructing your portfolio. So for a brand new soul getting into the crypto markets, there is only one portfolio I recommend. That is constructed of only two coins, Bitcoin and Ethereum. 50% BTC, 50% ETH. The 50-50 portfolio. Newbies don't know how to use DeFi. They don't know how to use DEXs. They don't even know where to trade alternative cryptos on centralized exchanges. They know how to use Coinbase, Cash App, or Robinhood. Thus, getting easy and simple exposure to the crypto markets is of the utmost importance. Although, what if you aren't a complete noob and you have some risk tolerance and the markets are ripe for a bull run? Well, then it would be time to split up your portfolio a lot differently, taking 25% of your Ethereum and putting it into higher risk altcoins, and taking 25% of your Bitcoin and putting it into higher risk altcoins. Thus, your portfolio split would be 25% Bitcoin, 25% Ethereum, and 50% higher risk altcoins. So what are some examples of higher risk altcoins? Well, in my opinion, unless you're experienced and you're looking for a quick flip, meme coins besides Dogecoin should be out of the picture. You should think of use cases and identify the sectors being constructed under the cryptocurrency umbrella, like DeFi, NFTs, metaverse and gaming, derivatives, ETH Layer 2s, Layer 1 alternatives, and more. So who are some DeFi coins I'm liking? Well, I'm really liking GMX, which could also be put in the derivatives category, as it's a decentralized perpetual exchange. Now, why GMX? Well, it's a great portfolio builder coin. GMX pays out a portion of staking yield in the native token of the chain. So users on Avalanche receive AVAX, and those on Arbitrum or Ethereum receive ETH. This allows for user self-selection into preferred reward and creates natural diversification into a less risky asset. Another DeFi coin or derivative I'm liking, Synthetics Network, which does the speaking for itself. So what about NFTs? Well, I like NFT infrastructure more than I like the NFTs themselves. Why search for gold when you can sell the pickaxes to the miners? So a big NFT infrastructure play I'm liking could also be grouped into ETH Layer 2s because it's a ZK rollup Layer 2, and that is Loopring. As we know, GameStop's NFT marketplace beta is built with Loopring tech. But GameStop also has another partnership with Immutable X, so their token IMX is also a great NFT infrastructure play, which could also be considered an ETH Layer 2 play, as IMX considered themselves the first Layer 2 for NFTs. So these are just examples of some higher risk altcoin assets. If you would like some other examples of metaverse and gaming, ETH Layer 2s, alternative Layer 1s, just take a look at some of my previous content. But what if we aren't in a bull market? Things are getting bearish. How would you construct a portfolio then? Well, you could go all into stablecoins 100%, but then your exposure to crypto is all gone, and no one really knows where the markets will go. So my recommendation is a 50-50 split of stables and the top two cryptocurrencies, Bitcoin and Ethereum, and a small amount of high-risk altcoins. This is the safety net portfolio, and it's 50% stables, 20% Bitcoin, and 20% Ethereum, and 10% high-risk altcoins. But what about an intermediate to advanced trader with a high-risk tolerance? Who wants a one-size-fits-all portfolio that is ready for a bull market? Well, this is what I call the almost perfect portfolio, and it consists of 15% Bitcoin, 15% ETH, 15% alternative Layer 1s, 15% ETH Layer 2s, and 40% other high-risk altcoins in differing crypto sectors. Now, there is so much more to building the optimal portfolio, rebalancing into alternative coins and stables, and knowing when to do that. Although, make sure you don't get too optimistic and aggressive, spreading yourself too thin between 20 to 50 to even 100 coins. You want a game plan, and you gotta stick to it. Remember, this is not financial advice, but hopefully this video gave you a good starting point. Cheers, viewers. I'll see you next time.